Quick heads up for the team on a big shift around OpenAI and Anthropic.
I saw this headline, but it sounded vague. Are they buying consulting firms now?
Yes, both have set up private equity-backed joint ventures to acquire AI services companies. OpenAI's vehicle, the deployment company, is reportedly raising about $4 billion for deals. Anthropic is doing something similar, with roughly $1.5 billion from major PE investors.
So this is not just hiring a few specialists. They are building something pretty large.
Exactly. The plan is to bring hundreds of engineers and consultants directly in-house. These teams will help enterprises deploy, tailor, and run OpenAI and Anthropic models at scale. So they move from mainly selling APIs to offering end-to-end AI solutions and implementation.
That sounds a lot like what big IT services and integration firms already do today.
That is why it is getting attention. Model providers are stepping directly into services territory. For us, the key point is simple. They could show up as alternative service partners. In future client meetings, OpenAI or Anthropic might be framed as both tech vendor and integrator.
So we should treat this as an early signal about who will own AI deployment work?
Right. In this brief, we will just anchor the basics and set up deeper discussion next.
Before we get into implications, can you walk through what has built up to this move?
Over the last year, enterprises gained easy access to advanced models through APIs and cloud marketplaces. But many of those customers then hit a wall trying to plug models into real workflows and data. The hard part is not calling the model. It is integration, security, and governance at scale. So we have a gap between powerful generic models and messy, industry-specific business processes. That gap has shown up as stalled pilots, one-off proofs of concept, and difficulty scaling successes. Investors and boards are now asking why AI spend is not translating into broad operational change. Against that backdrop, OpenAI and Anthropic are raising dedicated capital to buy implementation capacity. Most of that capital is earmarked for acquiring engineering services and consulting firms, not more compute. Blackstone's leadership is framing this explicitly as solving a talent bottleneck in enterprise AI deployment. They are saying there simply are not enough skilled partners who can embed AI into operations at scale. Palantir's model is the reference point here, embedding engineers inside customer teams to co-build solutions. OpenAI and Anthropic appear to be copying that playbook by building their own deployment-focused arms. For sectors like manufacturing, logistics, retail, and financial services, this matches what we see in deals. Pilots are relatively easy to spin up, but scaling across plants or business units needs deep domain work. So I read these acquisitions as a response to real implementation pain, not just AI valuation hype.
So access to strong models was solved first, and now the bottleneck is skilled integration capacity.
Exactly, and in the next part, we can look at how that shapes the competitive structure.
With that background, should we read this as a structural industry shift, not just one deal?
This news fits the structural theme of value chain compression in enterprise AI services. Historically, model vendors built platforms, while consulting firms like ours handled design and deployment. By acquiring services firms, OpenAI and Anthropic are pulling integration and consulting inside their own stack. That effectively shortens the traditional chain from hyperscaler to software vendor to systems integrator to client. I am reading this as early evidence that parts of our layer may be structurally compressed. There is a second theme here around business model and go-to-market integration. These ventures aim to tightly couple models, reference architectures, and embedded deployment playbooks. That looks closer to a product-led integrator model than a neutral, services-first consultancy. If it scales, the competitive axis becomes pure-play integrators versus vendor-aligned deployment arms. For now, I would treat this mainly as a story about how AI deployment will be packaged.
So we frame this as value chain compression, plus a shift toward product-led integration models.
Exactly, and next we can connect those themes to our client work and partner strategy.
For our AI and DX pursuits, what might actually change in day-to-day account work here?
First, client-side dynamics may shift if OpenAI or Anthropic pitch end-to-end AI deployment directly. IT and architecture teams at our manufacturing or logistics accounts could be approached outside formal RFPs.
So we might suddenly find a JV team already embedded when we arrive with a proposal?
That is one scenario I would prepare for, especially around greenfield or lighthouse initiatives. Business sponsors may like the simplicity of one vendor for model, deployment squad, and playbooks. Our opening here is risk, compliance, and procurement concerns about lock-in and single model dependence.
So in CIO or head of AI meetings, we should surface those lock-in questions earlier?
Exactly. Position us as the advisor helping them compare vendor-led squads with multi-model operating options. Second, competitors will likely mirror this model with their own embedded AI deployment studios.
You mean Accenture, NTT Data, Fujitsu, and others branding Copilot factories around specific models?
Yes, they will lean on preferred alliances and present tightly coupled consulting plus model bundles. Our differentiation is staying vendor agnostic and multi-model, while going deep on operations workflows. For proposals, that means explicitly contrasting our approach with single vendor deployment arms on slides.
So we should expect more side-by-side comparisons in RFPs between us and vendor-owned squads?
Yes, especially on integration into existing ERP, MES, WMS, and multi-cloud data environments. Third, for our sales motion, framing OpenAI and Anthropic correctly inside decks becomes critical.
We currently present them as neutral technology options. What needs to change in that story?
We should treat them as strategic vendors with emerging in-house services, not just model providers. In CIO and business sponsor meetings, clarify where we complement their squads versus provide an alternative. That includes slides on governance, operating model design, and change management beyond initial deployment.
So as a team, we should align on one shared narrative about vendor-led versus integrator-led AI programs.
Yes, and in the next part, we can spell out concrete watch points and client questions.
How should we take this back into account planning and upcoming client meetings?
I think this is easiest to use if we treat it as a vendor go-to-market shift. Model providers are moving into services, and we decide where we partner or compete.
So our next step is mainly watching how these joint ventures actually show up in market.
Yes, worth tracking which services firms they buy, especially near our priority accounts and industries. Also watch how AWS, Azure, and Google Cloud respond in their own services narratives.
For client conversations, what questions should we carry into the room without sounding alarmist?
Near term, ask clients how they view vendor-led AI deployment versus multi-vendor integration strategies. Then explore where they would value a neutral integrator, separate from any model provider's services arm. Internally, we can keep asking which accounts these JVs might target first, and how our offer contrasts. If we keep those questions live, this story becomes a useful qualifier, not just background noise.